Don't you know? Talking about a revolution sound. Don't you know? Talking about a revolution sound. While they're standing in the welfare lines, crying at the doorsteps of those armies of salvation, wasting time in the Hello, everyone. Those of you who are just arriving now, just get yourself settled in. We're going to have a bit of music just for a minute whilst we sort the panel out and welcome everyone in. Hi, everyone. Welcome to All Street Beat. Here's a little Tracy. Sitting around, waiting for a promotion. Don't you know? Talking about a revolution sound. People gonna rise up, get their share. People gonna rise up, take what's there. Don't you know you better run, 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 run. Oh, I said you better run, 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 run. Cause finally the tables are starting to turn. Talking about a revolution. Cause finally the tables are starting to turn. Talking about a revolution. Talking about a revolution. Roger, standing in the welfare line. Trying to do the fellas armies of salvation. Wasting time in the unemployment lines. Sitting around, waiting for a promotion. Don't you know? Talking about a revolution sound. And finally the tables are starting to turn. Talking about a revolution. Finally the tables are starting to turn. Talking about a revolution. Talking about a revolution. Talking about a revolution. Hey everyone, welcome to All Street Beat. I'm still trying to get my co-host up on the panel. It seems like we're having some bugs from Twitter Spaces. Let me just see if I can override the bugs. Okay, let's see now if that's working. Hey Bennett, are you there? You're a co-host?
Hey, how's it going, Tim? It's great to be up here. Yeah, so everyone, we're going to get some speakers up here, and we're going to make it happen, but I'm excited to host this space with you, Tim.
Awesome, Bennett. Thanks a lot, man. Listen, I'm just going to put the music back on for another 30 seconds whilst you get yourself sorted out, and we'll be right on to the All Street Beat. I want a ticket to anywhere. Maybe we make a deal. Maybe together we can get somewhere. Any place is better. Starting from zero, got nothing to lose. Maybe we'll make something. Me, myself, I got nothing to prove. You got a fast car. I got a plan to get us out of here. Been working at the convenience store. Managed to save just a little bit of money. Won't have to drive too far. Just cross the border and into the city. You and I can both get jobs. Finally see what it means to be living.
Hey everyone, welcome to the All Street Beat. Great to have you here. Thank you, Tracy Chapman, for that lovely intro music. I hope you all enjoyed it. Hope everyone's doing well. My name's Tim. I'm the host of All Street Beat. All Street Beat is brought to you by Commonwealth. The reason we have this show is really just to unpack really complex topics, I suppose, topics that are normally kept for certain networks, certain boardrooms, certain offices, certain environments, and not really topics that are openly exchanged in public. And our whole aim with the All Street Beat is to democratize the information and the discussion that venture capital and seasoned investors are having in their closed networks. We're trying to open it up. It's in fitting with the brand of Commonwealth. Commonwealth is the host. You'll see my icon is a smiley face, and we refer to Commonwealth as being part of All Street, not Wall Street. It's really for the 99%. What we're doing at Commonwealth is we've built an app, and that app allows retail investors to invest directly into venture capital funds. That it's all on chain, so it's fully decentralized and fully democratized. People who have not been allowed access previously are now allowed access through the Commonwealth application. It's built, it's in alpha, it's working alpha. We're doing closed beta very soon. And the exciting news today, which we launched, is that we will be moving our home over across to ZK Sync. And we're really excited and looking forward to having our app live on ZK Sync. But this isn't about Commonwealth necessarily. That's the host. Today, we are talking about what's going to be hot in the next bull run. So we've gathered a really expert panel. I'm excited to meet everybody here today and discuss with you and with everybody what we think is going to be a hot venture in the next bull run. And first, I would like to meet the panel. So we have a bit of a challenge for you guys who are up on the panel right now. If you can take turns and just introduce yourself, and the challenge is introducing yourself in less than 10 seconds. So whoever would like to unmute themselves first, and just afterwards we'll go in sequence, meet everyone on the panel, and then we'll dive right into the discussion. So whoever would like to unmute, just say hi.
Hey, what's up, everyone? I'm Brian. I am the head of content and marketing here at Santiment, and I wanted to introduce myself. For those unfamiliar with Santiment, we're a comprehensive market intelligence platform. By the way, someone may have some speakers super loud because I'm getting feedback, just FYI. But I'll keep going as they try to take care of that. So we're a comprehensive market intelligence platform for crypto. We focus on clean and reliable data feeds, low latency signals, and custom market analysis. And what we do is we try to leverage on-chain social development and other data sources in order to basically identify what's going on in the crypto markets at any given point. For those of you familiar with Bloomberg, it's somewhat similar to what they do for stocks and equities. We're doing the same thing for crypto and trying to get to the bottom of what is happening and objectively identify through data what's to come and what's next in the markets, instead of simply making estimations on support and resistance levels. We use data and historical divergences to find answers.
Cool,
so
man.
That's a little short blurb. Yeah, thank you.
Nice. That wasn't 10 seconds. I don't know if you had a timer, but it was a little bit longer. I know it's hard to introduce yourself in a short space, but we're trying to keep it under like 20 seconds for your intro. So
totally.
If you wouldn't mind, guys, just keep it short, and you'll get plenty of time to speak later. Yeah, go ahead, Theo.
Hey, this is Wayne Marcel, head of growth at Theo Protocol. We're a usability layer that makes using all digital assets easier. So short and sweet.
Wow, you nailed it.
Hey, Tim. Hey, Bennett. Simon Erickson here from 7 Investing. We pick our 7 favorite stock market opportunities each and every month at 7investing.com.
You also nailed it. Hey, man, nice to meet you. Who's next?
Hey guys, this is Ani. I'm a partner at Dragonfly. We are kind of a global crypto fund.
Yeah, we know Dragonfly. Hey, Arnie, nice to meet you. Nice to have you on. Next.
Hello. Thank you for inviting for this Twitter space. My name is Alex, and we are from a car group company. Hello, everyone.
Nice to have you back, Alex and former car. Who's next?
I'll go. Hi, my name is Mike. I'm the author of the Trading Mind Wheel, 8 Essential Skills for Trading Mastery.
Gosh, you guys are getting very good at short intros. Brilliant. Nice, Mike. Thanks. Who's next? Default, go ahead.
Name's Default, CEO of Apollo Algo, where we use AI language learning models for analyzing the markets, and I've been a crypto investor since 2011.
Awesome. Thank you, Default. Is that everyone? I think it might be. Great. That's awesome. So this is the first sort of panel that we have on here, the first group. And then, as normal, we'll thank the panelists after the first sort of section of the show. And then we will bring in the next group of speakers, and we'll have a deeper dive into the discussion from that group who've hopefully been listening throughout the discussion. Just a little bit of housekeeping very shortly. So everyone in the panel, we're obviously going to go into the Q&A. We're going to have a bit of a discussion around this topic of, what's hot and what's going to be the next, either big venture or big trend in the next bull market. So, but just like whenever you're ready to speak, just raise your hand. And when someone's finished, just unmute yourself and come in if you want to pick up on that train of thought. You don't need to raise your hand. So you can continue someone's train of thought. Just unmute yourself and do that, and then we can hopefully have a nice organic flow to the show. So thanks a lot, guys, for being here. If you guys are all able to do this, it'd be great if you can just do a tweet and let everyone know you're here. Let's try and get as many people in as possible. I do think we're going to have some cool alpha on the show today. It'd be great to share that with as many people as possible. So if you're on the panel or if you're in the group, you're in the audience, please just kind of give a tweet and let everyone know that you're here, and let's get some people in. And also, if you're in the audience and you really want to intervene, or you have a strong intervention question or contribution, you can put up your hand too. And my co-host Bennett from In Public will support us in kind of doing all the coordination of that. So yeah, feel free. Great, let's dive into it. So the first question I have for everyone, and this is actually on the top of my mind right now, I have to say I'm involved in crypto and Web3 and blockchain discussions, 10 hours a day for 7 days a week, more or less on average. And I've heard a lot of people say we're already in the bull run. And I've heard people say the bull run is still 8 months out. So that's quite divergent, between and a lot of people are obviously somewhere in between, flip-flopping as well. 1 minute we're in the bull run, next minute we're not in the bull run. I want to know from you guys if you think we're actually in the bull run yet. Who wants to take a stab?
Hey, I'll start off with that one, because I think it really depends on what people define as the bull run. Because for me, I tell people, yeah, it's already started. And even a year ago, my prediction, which, I don't really put any weight behind it. It's not like I'm an expert when it comes to that, but I personally felt it was going to start spring of this year. But like most bull runs, you don't realize you're in it when it starts. It's not till you look back and say, okay, that was the turning point. That was when it happened. Just like if you go back to March of 2020, I think at that time when we saw the market crash, nobody thought this is the beginning of the next bull run cycle. But it actually, when you look back, that was a turning point. That was the end of capitulation. That's when we started seeing the market moving forward. So I think we're in it, but we're not going to realize we're in it until we look back. And obviously, we get closer to the halving. I think we're going to see more and more signs. There's also a lot of, I guess you could say, there's a lot of positive and negative out in the news, but I think every time you turn around, there's more and more adoption happening. The space is moving forward, maturing. So I think we're in it, but we're not going to realize it. Most people aren't going to realize it till end of this year, early next year.
Do you guys agree? Yeah, default.
Contrarian belief to that because as I first got started in crypto and then I moved over to equity markets, analyzing the equity markets and the broader macro in general really gives you a sense of where all subsequent equities or like assets are going to go. So if you understand what's happening in the equity markets, the bond markets, and all stuff like that, it'll let you know where all the lesser or more beta names and stuff like that, more risk on assets, as it were, are going to trend as well. So in my opinion, we're not in a bull market yet at all. This is yet again another very extended and prolonged bear market rally. AI has driven the majority of this. So semiconductors, and I mean, we could still see in the S&P like all-time highs before we really have a massive pullback. There's a lot of credit bubbles right now that are like impending, and it's not going to go on forever. There has to be some type of reset, but to what degree, that's up for debate. I don't think it's only up from here, no whatsoever. I've literally been through every cycle in the cryptocurrency like space, and yeah, it can start to feel like that. But also, I also use like sentiment like analysis, and when everyone's like really bullish, I'm really hesitant. And when everyone's really bearish, I'm really like allocating a lot of funds. And it's worked out for me nonstop. And I'm not saying that I can't be wrong about this, it's just my opinion. But I really think that, especially with the downgrading in the US bonds recently, like that was a significant like blow to all the bulls thesis and everything like that. And I just think that we're going to have a significant pullback soon before we go on to the next bull run. But either way, I'm still buying right here specific coins that I think are going to 50x, 100x, whatever next bull run. So yeah.
We're going to get onto that in a little while. So just want to keep people a little bit on the edge of their seats before we hear what you think might be a good buy, actually, default. But thanks for that. Anyone else have a different view on that?
Yeah, what I would say basically is if you look at the history of bull markets in crypto, they tie almost one-to-one to the rise of the Federal Reserve balance sheet and money printing. And so when people look back at 2020 and the last cycle, I mean, people might say that it was the compound sort of liquidity mining program that kind of kickstarted a lot of stuff, but it actually goes way deeper than that, right? Because I mean, they injected the most cash into the U.S. economy in the history of the world, right? And I think that's like something that's very underrated. And so crypto is like, in other words, kind of a unit of globalization. And so that, of course, like tracks to a lot of the money printing. And I think that's one of the indicators that we keep close tabs on, especially as we continue to integrate crypto with the physical world, right? I think all of that becomes a lot more front of mind.
So you still think crypto's linked heavily to the traditional finance world, and it's not decoupling?
Not yet. I mean, like I think the scale of the crypto economy vis-a-vis any other traditional market is still minuscule. Like I think at $1 trillion market cap, right, we still have a lot of room to go. I think like we're only starting to see things now that will dramatically improve the physical world, and I know we're going to get to that, but yeah, I think we're still like very much in the early innings of like crypto deeply impacting a lot of people.
Awesome. Okay, thanks. Yep, go ahead, Seven.
Yeah, sure. Thanks, Tim, for the opportunity. I feel like I might be in the minority of this room because we've traditionally invested in the stock market. We are equity investors, and certainly our perspective is that 2022 was the healthy correction that the market needed, right? We go through cycles of the equity markets just like the crypto markets, and it was necessary for 2023 to now be kind of a rebuilding, a reset of expectations and certainly valuations. And I actually think that we're still in the early innings of the bull market continuing to form. Reason being for that is we've, even as good as the stock market has done, S&P is up around 17% or so. Here in 2023, there's still $5 trillion with a T of assets that are in money market funds right now in America alone. And a lot of people are okay, with making 4 or 5% as we look at every single head fake and sneeze that Jerome Powell does. But in the bigger picture of things, when the market's up 17%, you're getting 5% in a money market fund. You're going to start seeing those assets go into first large cap stocks. We've already seen that a lot with the Nvidias and the Teslas and the Microsofts of the world. And that's what's really propelling this gain in 2023. It's the Magnificent Seven. It's the largest companies in the S&P 500. I think it's going to be natural that the next step is a lot of that capital that's going into the mega caps is going to go into the mid cap names. And this is where we're really excited about a lot of the innovative companies that are around that 50, maybe $30 billion market cap. And of course, some of the smaller ones, which I think might be more relevant for this room. If you're risk tolerant to look for small caps, it's a really good time to get into those right now too.
Hey, so thank you. And you're sort of more than 2 feet in the traditional world in a sense. Can you tell us your views on crypto from outside the bubble? I think we're all quite heavily entrenched inside the bubble and sometimes lose the benefit of perspective. Can you give us what you think we should be looking out for in crypto?
Oh, great question, Tim. I don't pretend to be an expert on crypto. I've always said we're not smart enough to figure that out. We're going to partner with others to do kind of the models and the valuations for the crypto tokens and everything. I would say from an equity investor perspective, it is an interesting disruptive twist to the typical way that the financial system has been built. I've invested in Bitcoin. I bought it at $247 and sold it for a hot tub, which was fantastic. And the hot tub is fantastic too. But I think that as an equity investor too, we're looking more at like, what are companies doing with crypto and how is that impacting their own financials, right? Is Tesla loading up and Elon's putting it on the balance sheet as opposed to cash? Are they using it, as a side business that brings in a new income stream from trading or payments or anything else like that? But rather than being quite as in the trenches as we do when we're doing valuation models for equities, we, like you've just mentioned, we're kind of on the outside of the bubble for this one.
Okay, cool. But you don't think we're all crazy just yet?
No, absolutely not. I'm very interested in crypto. Web3 too. This is a really neat trend. I think it's got legs.
Nice, thanks. Michael, you've been patient. Go ahead.
Yeah, I might be sitting on the outside too. So I'm mostly trading equities. I think that the bull run really started more so in May. If you're taking a look at the major indexes, so like the S&P 500 and the NASDAQ, Russell 2000, NYSE, and Dow, they started to break out and turn really in May. They came off the bottom in January, but if you're looking at weekly charts, if you're looking at monthly charts, they all started to make the turn around the May level. Now, if you're doing a deeper dive into some of the sector leaders or some of the stocks that have been leading the way higher. Stocks like some of the ones that have already been mentioned, like NVIDIA, or basically anything that's AI related. If you're taking a look at the home builders, a number of those started to break out and run earlier in the year. Let's see, NVIDIA started to break out and run in January. Another big name, right? Everybody knows Meta. Meta started to break out and move in March. Some of the home builders, right? Like, let's see, Beazer home builders. Buddy of mine bought a house from Beazer, so I happen to know them. They started to break out and turn in April. So, well, what I've observed happen is that many of the stocks that are going to be leaders, they move long before the indexes turn. So I would say that the bull run, like if we're focused on buying leading stocks, then that will put us in the direction of where the momentum is, where the money is flowing to. That's where I like to go, and then I'll take a look at the indexes to kind of have a broader view of what's happening and if everything is moving in the same direction. When everything's moving in the same direction, that's when you tend to get smoother moves. When things are moving in opposite directions, like let's say the daily time frames are making a run, but the weekly or the monthly time frames are still kind of choppy, then that's where you'll get a lot more chop, a lot more noise, a lot more churn overall. When everything is moving in the same direction, then that's when you'll have smoother moves, and that's why we've had since May, June, and much of July.
Okay, so this is interesting. The sort of the macro and the traditional guys are telling us that they think the bull run has already begun. And here we are in crypto. We're not quite sure. We sort of I guess it's been a pretty traumatic year and a half for anybody involved in crypto. I'm not saying outside of crypto it's been plain sailing either, but we've had the black swan events inside crypto, several of them. Some of them self-inflicted wounds, and others seem to be coming from more sort of sinister or external or coordinated environments, for want of a better word. But the point is, I think everyone's a little bit cagey inside crypto right now to be bullish enough to have the conviction to say that we are in the start of reasonable market conditions. And somebody, I think, at the very start nailed it. Historically we look back and we've never known whenever we're actually in a bull run, which is why this question, I suppose, is very interesting and relevant right now for everyone to tackle. So I suppose the next question is, do we sort of agree that this is like a reasonable entry point for people who are interested and curious kind of dipping their toe into crypto, or even dipping their toe further into crypto? And I suppose that's a question to everyone on the panel.
Yeah, I can answer that one. So a major part of our content is we look at the correlation between crypto and the S&P, and we try to identify when they're kind of starting to separate, moving in slightly different directions. Based on our backtesting, we actually find that crypto in particular does its best performances and has its most likely bull runs when it doesn't have reliance on crypto. Some people think that crypto and equities typically move in opposite directions, but that's not the case. There isn't a negative correlation, and there isn't really a positive correlation. If you look at the entire roughly 15-year price performance of Bitcoin, it's essentially pretty random. And these past couple of years, as one of our earlier speakers said, it's been a fairly tight correlation where crypto is kind of functioning as a high leverage tech stock, almost sort of like a brand new tech stock that was just inserted into the S&P 500. So over the past roughly 12 months, crypto has actually lagged behind the S&P quite a bit, especially considering its increased volatility. It has been a good year for crypto. Obviously, it's up about 70% or so, give or take 5% since the beginning of the year. But it doesn't even feel the way it does. But the S&P just hit a 16-month high on July 31st before it had this mild pullback over the past 2 to 3 days. And crypto is not at a 16-month high. It's actually kind of fluctuated in the middle of its range, around that 28 to 32K level in terms of Bitcoin's price. And altcoins have kind of gradually fallen behind, with a lot of market cap hemorrhaging. So in terms of entry point, it actually does look like it's a better time for crypto than it does for the S&P, just from a pure mathematical standpoint. Now, a lot of that's going to hinge on whether sentiment remains on the negative end, as it has been throughout the year. It was especially negative in January when everyone was talking about 10K or sub 10K prices for Bitcoin, especially with the FTX collapse back in November. It got a little positive and FOMO-ish in April, and then it quickly dropped back to FUD status with a lot of people doubting crypto. And that's exactly what we want to see, is negative sentiment, people not believing that Bitcoin can return back to its all-time highs that it saw in November 2021. And as long as that's the case, the entry point probability for being a good one is better than average. So that's kind of what we're looking at now.
Nice, thanks. There's a couple of people on the panel who haven't spoken yet. I'm going to go to them before going back to those who have spoken. So Marco, and then after we'll go to Pharmacist.
Hi everyone, I'm Marco, and I'm founder of Arcomina Research. I specialize in macro and mostly equity trading. I'm in markets, and I also do investing as well. I've heard a lot of people here. I agree with a lot of views here. but I just want to present a bit different view that is from a macro perspective. Things are not really looking good right now. When I say that, I think that we are actually approaching some slowdown, some economic slowdown, and that will be actually reflected in all markets, including crypto, including equities, and currently we are in this seasonal time of the year when equities and crypto as well actually may not perform like most people would want them to perform. We may see some sideways activity, or we may actually see some losses in this month and especially next month, etc. And on a macro level, there are some headwinds, including government that is actually issuing a lot of debt right now, and they have actually been raising their issuance plans, and we don't know yet what kind of impact would that have on the markets, whether that would have some create some problems with the banks, whether we'll see I don't know, maybe some other crisis similar to what we've seen in March, or something like that. Usually, when we approach the end of Q3, things like that can happen. So actually, these 2 months will be revealing regarding this thing that is currently going on, and it will be actually by the end of Q3, we will see whether we have sort to say like dodged the bullet, or we are actually going to see some kind of a slowdown. And if we see that, actually this won't be like a good thing for investments. So actually it won't be a good thing for equities nor for crypto, and we could actually see another leg down. And so I'm not really buying that we are actually right now in an extended bull run. Like this is going to extend into, I don't know, into the end of the year or into next year or whatever. I think the road ahead is much more bumpy than people are currently giving it credit. So actually, I think there are more risks ahead.
Okay, thank Marco with the macro. Thanks so much, Marco. I hear you. I definitely hear that you don't recognize we're in the bull run yet. But I did also hear you say that if we sort of dodge the bullet, that was the quote that I'm taking, for the next 2 months, you might start to feel differently, right? So let's go to pharmacist, and if you can build on that.
GM, everybody, GM Commonwealth, and in public for actually bringing me up. Cheers, bro. And cheers to Feel Protocol, because I actually had their notification on and immediately they actually joined the space. I joined in, bro. So my take for if we're in the bull run or not, I like to use the charts, right? I like to use the charts because the chart have actually shown me more detailed direction in the market. And I just made a post because of this space. I just went back to check my chart again. And as we can see, you can actually check my recent post. As we can see on Bitcoin, from the last season, Bitcoin actually made a break of structure to the upside, right? Which we actually picked at 70K. And that's actually when you're in the market and the market breaks the direction to the upside, you're actually waiting for the market to actually retrace and you go down. You actually buy either at the 0.6 fib or the 0.7 fib. It's actually a very good signal for a buy, right? And as we can see on the chart, the market actually broke to the upside. The market broke to the upside, and right now the market from 70K dropped all the way to $15,000. For me, I actually made a video on YouTube beginning of the year, which they actually took down my YouTube channel already. So the thing was, I was actually expecting Bitcoin to get to 10,000 US dollars, but when I saw that the market actually retraced back up to the upside, and when you check the weekly time frame, the market have broken more structures, right? The market have broken more structures, signifying, oh, okay, I'm going up this time, but on the weekly and the daily, you should actually be expecting some, really nice retracement to the 23K to 22K. It's not a certainty, but buying there with a spot bag, to go to the upside is actually going to be nice, because if we do break down to 15,000 and start heading back for 10,000, it's going to be really, really dangerous for all of us, bro. It's going to be dangerous for even projects building right now, projects which have actually succeeded in surviving the first collapse of Bitcoin to 15,000. It's going to be catastrophic for them, because they're going to be losing a whole lot of value. People are going to panic. Everybody's going to sell off again. And I would personally, I don't want it to actually go down. And I don't want to say we are in the bull market yet, because when you check the market or from the monthly time frame, it actually broke to the downside, meaning
Did you guys lose Pharmacist? I've lost him.
Lost him, yeah.
On the weekly,
Yep.
where Bitcoin actually broke $21,500. It actually broke $21,000 high, broke the highs of 25.
Okay, Pharmacist, we're losing you. Your connection, maybe just want to check that for us. I'll go over to default in the meantime.
Yeah, I mean, I would still pretty much on the same page as I said earlier. I guess you could get
Hear me?
detail. Is he back? Is his connection?
Can you hear me?
Your connection's not great, Pharmacist. Maybe you just want to just stabilize the connection, and we'll just let default go, and we'll invite you back in, sir.
Yeah, so there's more factors at play here in crypto than ever before, and I don't say that lightly. Like, especially when we're talking about like these Bitcoin ETFs, people tend to not really do their own actual research. They see a tweet, oh, it's a Bitcoin ETF, it's BlackRock, they manage trillions of dollars. This is so bullish. Well, actually, I don't really think so that much, because if you read the S1 and actually read it and look into it, it's terrifying. Like all the subsequent clauses that are inside of it, the fact that they have the unilateral decision making to fork Bitcoin into their own version that is not decentralized, and that they can alter the supply so it will no longer be Bitcoin whatsoever. So that's not bullish for Bitcoin, because then that's not the spot ETF buying Bitcoin. The buying pressure would be on something else. That's really bad. And then a lot of people won't know that. They'll just think that they're buying Bitcoin, and they'll just be holding whatever is inside of the ETF, which to me, it just makes no sense whatsoever why you would invest in a Bitcoin ETF when you could just buy Bitcoin. Literally makes no sense to me. So that is honestly like a really not ideal scenario. That's a big thing. Also, the kind of impending collapse of Binance, which I've been screaming about for a long time, it's slowly breaking down. That's really, really, really bad for the space in terms of what that could happen. It'd be FTX on steroids. And you can get into the whole spiel about Justin Sun and then the TUSD stablecoin, which is also like not fully collateralized, and it just kind of minted out of thin air. These are not good things. It's like there's a lot of market manipulation that goes on to hold like Binance up from breaking under 220, and what the aftermath would be if Binance were to collapse, and the consumer confidence would be lost. But in my opinion, I I think it's bad, but I also am at the point where I think it needs to happen, and is a good thing, because from the ashes the phoenix can rise. So I don't like centralized exchanges. I never have, I never will. And there's just this pressure from the government to not allow DeFi to really truly raise up and become dominant, because anytime there is a decentralized exchange, what is the main problem? It's the on and off ramp from fiat. And that's what causes there to be such large spreads and such large fees, which the consumers don't like. So then the volume never really comes onto the decentralized exchanges. So then they never really take off, and people just continue to use the centralized exchanges. But I think that is something that is inevitable. But until that issue can be solved without the SEC interventions at every point in time when someone creates something like some type of on and off ramp for these decentralized exchanges, it's never really going to like fruition to its like true value. But I think that's inevitable. And yeah, it's just a couple factors that's in play right now.
Yeah, no, thanks for that. I mean, I think I want to switch it up because we've had a good dive, I think, into how we perceive the market, whether or not we're in a bull run, mixed feelings on that, and then also whether or not it's a good entry for if you're into crypto or you were curious about crypto, whether or not now might be a good time. I haven't heard anybody say it's definitely not a good time. I think the sentiment was slightly more bullish on that front, just from what I'm hearing, from what people are saying here. But I would like to switch it up a little bit. Like, I'm going to ask a question, and I want the panel to, or even the audience as well, to like just raise your hand, or like, yeah, give a thumbs up actually if you agree with the question, and if you don't agree with the question, you can put the thumbs down, right? So the question is, if you could invest in an early stage project which you like the fundamentals of, and it's a Web3 project and it's token based, would you invest in it today? Can everyone do a thumbs up or a thumbs down? Okay, I'm getting a couple of thumbs up. I'm not seeing too many thumbs downs. The reason for my default, thanks, yeah, Theo. The reason for my question is it's a little bit let's say incomplete, right? We all know that if you're going to invest in something, you need to have a lot of information, and you need to be quite kind of certain over and convicted over what it is you're investing into. I'm just asking you a very hypothetical question. If all the boxes were ticked, would you invest? And the reason behind the question is pretty clear. It's also to gauge sentiment, because if good projects don't receive backing, then I think we have a general problem, right? But if there's still that conviction that a good project has viability long term as an investment, and to succeed and to get traction as a Web3 venture, then I think then we should still have all street beats. We should still gather in Twitter spaces, and we should still try to find those projects and back those projects and continue to build the future of Web3, and also how that integrates into real world solutions, right? So that's where I'm trying to get to with this discussion. I'm getting a feeling that you probably would back a venture that you really liked. So the next question is, do you have anything that you are looking at right now that you think is very interesting for the next run, right? And the time frame is within the next 1 to 2 years, let's say 18 months from now. If you do have something and you're on the panel, don't hesitate. Just unmute yourself and tell us about it if you're comfortable.
Yeah, so we can't actually talk about specific names. And again, like, none of this is financial advice, obviously, but the two areas that I'm really interested in are kind of Web3 marketing, and I'd say a lot of the DePIN stuff, so the decentralized physical infra kind of cycle kickstarting. And there are a lot of tailwinds behind both. In the case of the former and the marketing stuff, I mean, especially in times of consolidation, you see that like marketing budgets kind of get cut, but we've been doing a lot of great work on like, what do Web3 native ads look like? Because technically everything in crypto is kind of a consumer product, but unlike in Web2, we haven't figured out how to do the crypto version of, say, monetizing eyeballs. And so that's something I'm very excited by. In the case of the physical infra stuff, I mean, like, you're looking at all this insane investment by governments into physical infra, digital infrastructure, and just a bunch of the projects that we see in this space, I think, are super compelling on how do we make people more productive and then therefore kind of unlock more money in the economy. So.
Okay, can I ask you just to summarize that in a bit more layman's terms? Because I think there's going to be people who are not like familiar with some of the terms you used. You don't have to name specific ventures. I get that you can't do that for conflict of interest reasons. But if you can just give like a bit more of a layman's kind of description of what you think the thematics are that are interesting.
Yeah, I mean, I guess in layman's terms, like, so protocols or whatever that allow you to, like in the case of marketing, right? It's like, attribution, tracking that. I mean, attribution, in other words, is just kind of what Facebook and Google do of like, where did someone come from, right? If they were going to use Facebook or something like that. In the case of crypto, there are a bunch of companies kind of doing this. And so I would look at that. In the physical infra stuff, specifically decentralized wireless. So that's like an area I'm personally very captivated by, but kind of like bandwidth markets and like how do we kind of disrupt a lot of the telco stuff. I know that's quite complex, but happy to answer any questions if people in the audience are still unsure.
It's super interesting. Thank you. I'm going to open it up to the rest of the panel. What do you guys have your eye on? And for those of you who aren't conflicted by, kind of representing these ventures, if it's just things that you can without not financial advice, if you feel comfortable, you can also say which coins you like that are trading right now. If you feel comfortable doing that as well.
So I gotta just hop in here because like even though I said all that stuff that sounds really bearish, I'm still buying every single day. Like literally, this is like you always want to like fade the short term trend for the long term trend. So if you have a long term horizon, then and you can allocate capital that you're not like staring at every day, and you know projects that you are bullish on and you think are going to be really innovative, you should buy. And that's not financial advice. It's just me saying like that's what I do. And but you also have to do a lot of research because there's a lot of competition in crypto. Every bull market, the top 10 alts almost always get replaced by better technology. So that's what I always look for. I always look for trends in technology and how easily could this be replaced, right? So I've been buying Render nonstop for the past year, since last August, literally 1 year now. And if you don't know what Render is, if y'all let me just pin that tweet up there. It's basically just using decentralized graphics computing for rendering graphics. And it's not like, oh, they have potential partnerships. No, they're used by NASA. They're used by Marvel. They're used by so many different companies. So it already has real world use case. And obviously right now there's a graphics card shortage. There's the rumor that NVIDIA's sold out to the end of the year. And there was another report last night that there's something along the lines of several 100,000 like GPUs in demand right now from all these new AI language learning model companies. So that demand has to be met, right? So this is something that offers the supply. It's instead of solving the same boring like SHA-256 algorithm, which really doesn't have any intrinsic value in itself other than like a store of value, but like that data yielding like intrinsic value. So people are able to use this network for whether they're making movies, whether they're making TV shows, video games. And now we just voted on recently integrating some modules that will allow AI language learning models, which once that is added into it, I personally think that, and I've said this, is going to go insane. So that's one thing. And also they own the intellectual property. So that is another like wall that allows there to not really be a whole lot of competition in this space. So like for me, I've checklist pretty much checks all the boxes. And whenever it's under $2, like it is, I think it is still right now, I'm buying like a couple thousand of them like nonstop and I'm just putting it away, putting it in my hardware wallet because I am just so confident that this is something that it has very strong fundamentals, technically sound, and it is part of the technological trend that's not going to stop. And then the other one would be something I just recently found out, and I'm basically obsessed with doing research and finding gems because it's so exciting. Is QRL, because quantum computing is going to be like a really big thing. It's synonymous with artificial intelligence, and it's just now starting to ring bells again, especially as LK99 is like all over the internet, and like the implications go into quantum computing as well. It's one of the only blockchains that uses a NIST approved XMSS algorithm, so it is quantum proof, and there's a huge discrepancy with a lot of big cryptos not being quantum proof. And by that, I mean like basically breaking the cryptography that secures the blockchain. So this is a big problem for Bitcoin into the future. They are going to have to face some tough decisions in terms of stopping this, because there's currently 4 million Bitcoin which are vulnerable to a quantum encryption attack because they use public key to public key on the old addresses. So QRL solves this. So I've allocated towards that because it's early, it's a trend. That quantum computing is not going anywhere. It's not a matter of like if, it's a matter of when. So this is like how I do my investing. It's technological trends and sustainability, and basically like what are the thresholds of competition. So
Hey, Default, that's great. Thank you. And I mean, just to be transparent, you will disclose if you are like a founder or a kind of private investor and you're not just pumping bags. I think we want to just make sure that there's kind of like some credibility behind what we're saying here. I guess it just goes for everybody here. And thank you already for Dragonfly to not do that. So you're both doing it the right way as far as I can see.
I would be honest with you, but no, just like I invest in projects and I post literally nonstop. Like if you were to like scroll my feed, like I'm always like, I'm buying right here, like I'm buying here again. You guys, it's like, okay, we're up 400%. Like I don't know what to tell you. Like I'm holding your hand through this, but let's go. Get ready for the next bull market.
Awesome. Well, thanks for those two tips. And I want to encourage the panel just to unmute yourselves and follow on from the last speaker, because we're on a topic right now of what you like for the next bull run. And just go ahead. Trady. Tradix.
Yeah.
How do I even say that? Trady.
It's Tradix.
Tradix. Sorry, man. Yeah, go ahead.
Thanks a lot. So hi everyone. This is Heather here. I have like about 7-8 years of experience in data science, and then I started trading about 4 years ago. I think one thing that I'm very interested in the next bull run, two things actually. One, just based on like the overall markets, because we were talking about that, the seasonality does sort of start to decline towards August and September, at least for S&P, and maybe probably for Bitcoin as well. And then it starts to sort of ramp up in November as well. So if we are looking for short term, I'd keep that in mind. But if we are looking at long term, hopefully everything will be fine. But the more interesting thing that I've been working on over the last probably 2 months is that there were a lot of rug pulls. There was like people lost a lot of money in the last bull run with these like scam projects. But one thing with these like LLM applications of AI, the good thing is that someone, it's not us, but it should probably be us, but someone should actually be building right now an LLM based chatbot that can help new users understand these projects. Because what ends up happening is if there is too much hype about a project, people start to sort of overlook the pros and cons and then just look at the pros. But I think given we have like very comprehensive data sources like Messari and these other websites that have like all the information that you need about a coin or a project, it might be worthwhile to just like always ask these LLMs to give you like pros and cons analysis of these coins and these projects, just to avoid like getting rug pulled again. Because as we are consolidating and as we are like hitting these I think there is a level on 31K for Bitcoin where we might find some resistance. But as hopefully we cross these levels, there is going to be a lot of euphoria and a lot of happiness in the market if we do break that level, because there is no resistance, I think, till like 40K or whatnot on the Bitcoin chart. So hopefully other like altcoins are going to go up as well. But one thing that I'd be very interested in seeing is like something that holds you back from the bad projects and then lets you go with the good ones. So just throwing this out, I'd love to do this ourselves because we have a couple of LLM based bots, but those are mostly for equities. This just like came out yesterday where I thought maybe we should also be building out something, not just us, but all of us. Someone should be building a bot for crypto projects that can give you a very comprehensive and unbiased analysis of this is good, this is bad, this is why it could go up, this is why it could go down. I think just going based on like these hype cycles is probably not the way to go for a lot of newbies as they join once the next bull market starts. So I just wanted to throw that out. Yeah, thanks.
Nice. Yeah, I really like your take on that. I'm interested to hear if anybody wants to pick up on that thread or just dive into what they think is going to be really, really appealing in the next cycle. Thanks, Tradetix. The panel's gone quiet. Do you guys not have anything that you're looking at that you think is very exciting?
Giving other people chances.
Yes.
Santi.
So would you like him to go ahead, or we want me to jump in real quick?
Yeah. Go ahead, sir.
No worries. So we try to look at a few things. For one, which trading returns on average are struggling or are underwater at any given time? There's a metric known as MVRV, which mathematically plots out whether traders are heavily in profit or heavily underwater at any given time. As you may expect, the majority of altcoins in particular are underwater for traders, meaning that on average, there's less risk of entering a position into roughly 80 to 90% of assets in crypto right now. Now, the question is, are they fundamentally sound, right? Because there can be many reasons why traders are struggling to profit and are hemorrhaging money right now. And it's not always just natural ebbs and flows of the market. Sometimes it's related to an asset being a rug pull or an asset having financial struggles that the crowd has picked up upon and are running for the hills because they don't trust the asset. But assuming all is stable, which especially for many large caps out there, there is no reason to be worried about the asset other than the fact that it's been losing a lot of market cap lately. We're looking at the Ethereums out there, the Cardanos, Chainlinks, Polkadot. These are a lot of assets that are not just stable in terms of their teams and their coders working on the asset, but they're mathematically way behind Bitcoin in terms of the amount that they've dropped over the past couple of years, particularly in 2022 when we were hearing about these Fed interest rate hikes every single month and crypto is heavily pegged to the S&P. So what we're looking at now is assets that are seeing heavy development activity. You can go on any asset's GitHub at any time and see just how active their team is. And this is a great way to kind of validate that you're investing in an asset that actually has a team that cares, that has a team that's actually working toward pushing the asset forward with innovation and technological advancements. And what we do on Santiment is we actually kind of filter those GitHub posts to exclude things like normal Slack updates or team chats that sometimes show up as a GitHub submission, which some do and some don't. So we kind of filter all that noise out and we look at the assets that are actually objectively seeing the most development activity. And right now, just to name a few, and these are completely, unbiased statements we're making with no kind of mission to put some in a special category. But Cardano's out there, Polkadot, which by the way shares its GitHub repository with Kusama, which is a lesser known altcoin. Chainlink is up there. Internet Computer, which some of you may have heard of. These are a few that are kind of top 50 to 100 assets, market cap wise, that are continuing to see lots of push and innovation from its teams, despite the market cap declines that they've been going through over the past couple of years.
Can I just ask a question on that, because it's really compelling what you say, and like it makes me want to go out and like fill my bags full of Cardano, Polkadot, Chainlink, and so forth. But is it possible that the market caps were like overly inflated in the last, and they're just kind of correcting down to where they should be?
Oh yeah, for sure. I think it's nearly undebatable that you can say that in the tail end of 2021, when those are the coins that kind of just got a huge boost due to the FOMO and the huge fever of new assets that were getting pumped. It was very similar to what was happening in late 2017 for people who were in the markets way back then. It was just tons and tons of assets that you would never expect to get the kind of attention they did. But as soon as they got a 20% pump, the FOMO crowd said, why don't we make it 120% pump just by injecting a massive amount of capital into them all at once? And so whales would see that and kind of be like, okay, the small traders out there are kind of pushing up these market caps just on fumes, and we're going to take profits because there's no way these prices are sustainable. And all of a sudden the whales pull out and the market caps just fall off of a cliff with no support to rebound. And I think that's kind of what's happened here.
And when you said before that these kind of assets are mathematically way behind Bitcoin, for example, I know that you can back that up, but like it seems contradictory somewhat. Or there's it's not just about maths, right? There's a lot of subjective analysis as well.
Yeah, that's fair. I mean, there's a lot of factors in it. You can look at. It's easy to pull data and come up with a story, and we try to make sure that when we say, on the yearly scale, something is behind Bitcoin, we're not just handpicking that when in fact on the 3-year scale they're way above, right? It has to be relevant to kind of the long-term story. So long-term wise, if we're looking at kind of a 2-year scale or even a 5-year scale, most altcoins that are viable still have an argument to make up a lot of ground based on how much Bitcoin has kind of moved ahead, because Bitcoin will move up slowly during bull markets relative to altcoins. But when there's a bear market, Bitcoin is falling much more calmly compared to the absolute cliff falls that we see from altcoins. So that's how Bitcoin over the long run tends to stay far above water compared to the more risky assets out there. But as long as market caps are starting to rise, which, depending on where you stand on whether we're in a bull market or not, that's when you can see altcoins really make up a lot of ground based on how much they've fallen since kind of the beginning of 2022.
Cool. Thanks. It's I could talk about this stuff all day. Seven, you wanted to come in as well with an intervention, and then then we're going to sort of hear from the rest of the panel if they have any hot tips for assets which they think have huge potential in the next bull run.
Yeah, thanks very much, Tim. I appreciate, speaking from the equity side of this, one thing that's a little bit different about stocks, at least compared to crypto in a lot of ways, is that we get guidance. We get quarterly earnings from companies that talk about how things are going out there, and then their expectations, their forecasts for what they're expecting for the upcoming fiscal year. I think that's interesting because last year, in 2022, it didn't matter how your business was doing. You could be obliterating all the expectations that Wall Street had for you, and then you would just say, hey, you know what, we're going to be conservative about guidance. We don't know what the Fed's going to do. There's uncertainty in the macro right now. And you get lambasted by the market. Your stock would sell off 20%, even with a really good quarter, just for being a little conservative because of the macro that we're seeing. I think it's rewarding here in 2023 to see that returning, that actually companies are going to get praised and rewarded by investors for reporting good results, and then also being a little bit more bullish and optimistic about the expectations for the upcoming year. The overlap, a couple of companies that touch kind of the crypto side of this and also the equity side of this. We've certainly seen it with both NVIDIA and with SoFi. NVIDIA, of course, is making the GPUs that a lot of mining is being used for. They came out and they said, hey, we're going to expect that we're going to have an $11 billion quarter upcoming, the highest they've ever seen, just a phenomenal growth rate year over year. And then they did it. It just showed that there was so much demand for for their chips out there, that this has been a company that unsurprisingly has been one of the best performers in the S&P this year. And then the other one, SoFi. I mean, you see SoFi as kind of this, an app that's more or less a digital bank. Wants to make loans to all of its customers throughout their entire life, from simple things like student loan refinancing to home loans to auto loans to whatever it might be. And they had the intention, from just going public a couple of years ago to now being one of the 10 largest financial institutions in the United States. And you see them continuing to grow their asset base and being very responsible with how they're using it. So I think that my point, in just a few words of what I'd like to say from the equity markets is there is optimism, not only from investors and how they're putting money back into equities from those money markets and short-term instruments like we talked about earlier, but also optimism in the companies is saying, hey, it's getting better out there. We're seeing the rates coming down. We're seeing our business is turning around. They're going to put a little bit more of a foot on the accelerator, go after some of those growth projects that we've seen cut so significantly last year. I think that's a really good time, at least for growth style tech investments in the market right now.
Nice, appreciate that. That's great. Thanks, Evan. I'm going to start drawing the first session, kind of winding it up. Thanks very much to the panel that's here. You can stay on for the show, and of course, if you want to come back in later on, just raise your hand, let us know. But we'll be switching around the panel, and we'll be continuing the discussion on what we think is going to be appealing in the next run. So thanks everyone up to now. If you're new on the panel, feel free to unmute yourself and just introduce yourself. And tell us also, what you think of the conversation so far, especially if you have something you're looking at for the next bull run and you feel comfortable sharing that information. Please go ahead.
No, I'll go. So this is Matt Tuttle. We run Tuttle Capital Management.
Hey, Matt.
We're a ETF provider. So you may have heard of SARK, the inverse Cathie Wood. That was us. We also did SPCX, which was a SPAC ETF when those were hot. Right now we're running the long and the short Jim Cramer. Long Jim Cramer's kicking the short Jim Cramer's butt. And we've got, I don't know, another 15, 20 ETFs that are in filing. As far as what we're looking at for the next bull run, assuming that this is a next bull run, ancillary stocks in the AI space. So we created an index called the AI Emerging Leaders Index, which are guys in the AI space, but under 500 billion in market cap. So, not as concerned about the Fang and Friends, because I think that's, that's pretty much overplayed and, crowded, and everyone knows about that. Much more concerned about, the ancillary names, the stocks under, the Fang and Friends. Think you're going to have another really good opportunity to short regional banks. I don't think you go from 0 to 5% in interest rates at the speed we've done it without creating some more problems. And as much as I hate to say it, I think if this market keeps going up, then the consensus types of picks, which are what Jim Cramer is known for, are actually going to do pretty well. So those are the things we're kind of looking at.
Okay, brilliant. I love the Jim Cramer long and short. Cool. Thanks for that. Who's next on the panel here? I've got a few new speakers. Shark, do you want to say hi? Introduce yourself.
Sure. What's going on? Yeah, no, I caught the tail end of that last segment, and it was super interesting. I come more from an equities futures background, so I've done some dabbling in crypto, but so for me also this has been great, just kind of hearing some speakers' thoughts, great information, and now I'm learning stuff too, so it's really cool. Overall, like I said, I'm not too involved with the crypto markets, but as far as things, markets all act in the same ways. right? You have periods of consolidation and then expansion of that consolidation, and you get the volatility. So, the biggest thing that I could say for the listeners, just from a market perspective, and everyone has their different views of what they believe Bitcoin or any of these vehicles or instruments provide, whether it's long-term investment or if it's from a trading perspective. But from just a basic market, how should I say, the function, the way it works is, keep an eye if something is selling down and it's been holding an area of consolidation for a while. I don't really use Bollinger Bands, but they can be a great tool to kind of see them tightening. And usually when they get really tight, you're in that consolidation range. You can expect, an expansion of that, whether it's up or down, depending on your levels. So the biggest thing, just from a trading perspective, if you are looking for those opportunities, just understanding the way that the market works in those functions, I think can be important to, finding setups. And of course, you're going to manage your risk, and have your levels where you're going to get out if you're wrong. But finding those opportunities where a coin or whatever hasn't been doing something for a while, and it's maintaining a certain, demand zone and or a supply zone, depending on which way you want to trade, and then taking advantage of that possible opportunity.
Nice. Yeah, I mean, I appreciate the parallels with the equities market. I think a lot of people who are from the traditional finance world have been voicing their kind of just their views on whether or not they think we're already in a bear market or not. What's your views on that?
No, I really don't think there's been so much macro talk about, interest rates and this and that. And certainly, obviously we had that big news with the credit rating, that caused a big push in, the equities and futures. But I don't really think we've been in a bear market since, March. So,
Yeah.
you just have to follow the price action, and, the people that are the Uber bears, posting and, for likes or whatnot, it's kind of irresponsible in my opinion. So, long term, I've been waiting for a bit of that dip that we got from that news because, long term projections is up into the end of the year, but we needed that cool off to be able to reset things. And, even some more downside is fine. There's so many levels that have been broken by the bulls that can be supported that, big picture, it's hard to really get a bear case until we really start breaking. I mean, these guys are posting, I'm like, talk to me when SPY's below, 400 or ES is below 4,000. I mean, it's 500 points away.
Yeah, I got to agree from a technical standpoint. You said, follow price and look at price action. That's pretty much all I follow is technical analysis for the most part. I use the fundamentals to kind of see what the environment's like. But the environments, you mentioned interest rates and the inverted yield curve, things like that. Those are all pointing that we should have been in recession months ago. And the fact is that price keeps rising. You can't fight the market. Everything I'm seeing technically is still bullish, other than the Nasdaq's got a lower high and lower low, but it's still in a bullish mode. It's just a correction as of right now. So there's no reason to fight that. There's opportunities to buy on the dips still.
Yeah, and I would add, I mean, I think the whole question of whether we're in a bull or a bear market's stupid. You follow the price. You should be agnostic between being long and short. And there are always going to be opportunities. Take advantage of the opportunities. These guys who are perma bulls and right now the perma bears are just getting slaughtered. So what we focus on every day is, what are the opportunities? If they're on the long side, great. If they're on the short side, great. Doesn't really matter. But this whole bull bear argument I think gets people focused on the wrong thing. To me, it's focus on price, focus on where the opportunities are.
Okay, 100%. I think everyone in crypto is stupid then, because I think we all only talk about whether it's bull or bear, and maybe that's one of the biggest mistakes we're making. Zulian, you've got your hand up. You've been very patient.
Hey guys, yeah, just letting everyone speak and stuff. I guess quick intro. I've been in the space for about 6 years now. started as an analyst and trader and stuff, and over the past 2 years have been mostly working on building protocols. So been building a perpetual futures DEX now called Hyperliquid, where you can trade everything on chain and it's completely transparent. Yeah, happy to
Nice.
kind of follow on the conversation.
Cool. Apart from your own venture, what do you like at the moment for the next, or for the next good market conditions, let's call it, for the next 18 months? Hopefully we're entering into a period of increased liquidity, and certain ventures that have a lot of promise from a fundamental point of view can thrive, whether it's something new or something that's old and just way undervalued. Is there anything you're looking at in your personal capacity? Is there something you like?
Yeah, it's definitely an open question there. Let's try to narrow it down. I guess some people mentioned like not too excited about Bitcoin ETF because you can buy spot. As much as I agree with buying spot being the better option, just in general, Bitcoin ETF allows, for example, retirement accounts to get exposure to Bitcoin, or for example, people in Canada, because there is a Bitcoin ETF in Canada, you can use your retirement savings accounts to get exposure to Bitcoin through the spot ETFs without actually buying Bitcoin that you can't actually buy with your retirement account. So ETFs really unlock a lot of the kind of power and access you can have there, especially if they're spot ETFs. So I do think that they can be very nice for the overall space. In terms of like projects specifically, I think things will be definitely moving on chain a lot more. Perpetual futures, as I'm working on, but also just dexes in general. So, Uniswap is definitely a big one that's been pushing boundaries of what can be done. Not so sure about their token though. I think until they turn on that fee sharing, but even then, it's not quite enough fee sharing to go around and be a super profitable kind of hold. So looking at a lot of the different projects that have kind of some sustainability, whether it's Radiant Capital on Arbitrum. I think Optimism is something that's super interesting, mostly because a lot of projects are forking the Optimism SDK and building on top of it, and then sharing revenue from their sequencers to Optimism. So, for example, Base that launched recently has been sharing a huge amount, really just 10% of their fees, but that really adds up to what Optimism is collecting and kind of building on that. So I think Optimism is definitely going to be super interesting moving forward as more and more chains are using their SDK and building on top of that. So definitely going to be super interested in kind of following along those lines. And then just there's a lot of things happening on chain. So staying on chain and wallets and different things, I think kind of the front end side is one of the biggest things moving forward. And kind of finally, just to wrap it up, I think Celestia and modularity, how you can actually scale different blockchains, it's going to be super interesting to see how that develops. I do think we're still far away from any type of bull run. Time-based capitulation is kind of where we're at. It's just prices aren't going to do anything for the next months, maybe over a year. I think that's going to be scaring a lot of people away. Just space is boring, but I enjoy it. It's easier to build things.
Space is boring. I've heard that recently too. Julian, before you go away, what was the name of your the venture you're building again?
Yeah, so working on Hyperliquid. It's a perpetual futures DEX. So we have the whole order book on chain, and you can trade a variety of assets.
Is it live? I mean, are you feature complete? Are you where are you with the build?
Yeah, we launched our alpha mainnet back in late April. So not quite feature complete because we do want to add a lot more things, but you can trade everything. You have stop losses, market limit orders, everything, and you can do API trading if you're a market maker. You can do pretty much everything you would want from a centralized exchange, but you do it completely on chain, onboarding through Arbitrum.
Cool. I'll be taking a look. Thanks for sharing that. Who's next on and hasn't spoken, or if you've spoken already, just please unmute yourself and you can pitch in as well. I think there's a new speaker who hasn't spoken yet, if I'm not mistaken. Money something. Sorry, Money Mitch.
Yeah, what's going on, guys?
Hey, man.
Can you hear me?
Yeah, 5 on 5.
All right.
Go ahead.
Perfect. So I work with Benzinga. I'm like an anchor, and so I deal with a lot of different markets, whether it be stock market or cryptocurrency involved. And of course, one thing that's always on my mind is regulation in this space. I'm sure it's on everybody's mind as we get closer and closer towards figuring out what's going to happen in the next 2 years. That's really what my concern is that, of course, I feel like things are going to get worse before they get better. And that's my biggest concern here is looking for opportunities on the decline to get in this space because one thing that I definitely think I missed out on was the first early waves, right? And I feel like technology always comes in waves, and I feel that everything's kind of coming out now, right? We were on this big AI wave. I think first, it was first all about trading. Then we went into that NFT space, and now it's all how does everything combine? Blockchain, NFTs, AI. I think this is all just a massive technology wave. So it's how do we get in front of this and what kind of investments can we find? So I think that's exactly what we're all here for today. And I'm excited to also listen from the experts here. Everybody like, let's say, Julian, that's actually building right now. This is where I think is very important time. And we got to be looking for the builders to really learn from them because they're the true experts.
Thanks for that. I mean, just picking up on your thread, is there anybody that's involved with a company that they are, like you can be transparent as well. You can say you're an advisor, you can say you're a founder that you find extremely interesting, which maybe does capitalize on the wave that's coming. Anybody involved with anything like that here? Nobody's unmuting, so I'm assuming not really. Well, let's move on to another question then. Some people have been asking, in the questions whether or not, Bitcoin is not Bitcoin. Sorry, if dollar cost averaging is a good strategy, and how should they be getting into the market? Is there, for those of us who are experts with, navigating the dexes and the sexes and putting things on chain, what is a good way to enter the market right now? Somebody mentioned that they really don't trust central exchanges. There's a lot of discussion here about things going more and more on chain, more decentralized. It's quite difficult then if you're new and you're listening. How's a good, what's a good, let's say, safe? I don't want to say safe because nothing's 100% safe, but what would you recommend in terms of people getting into the market? And also, should they, for example, if they want to hypothetically take $5,000 and enter into the market, should they do that all at once, or should they, dollar cost average? What is that even? Can somebody give a bit of an explanation around that?
Yeah, I can jump in on that one. So dollar cost averaging, there's a few different ways to do it. Let's say we take your $5,000 example. If someone wants to break that into 10 different buys based on a criteria, they can do so, for example, by putting $500 in by date. Let's say once per week, every Friday afternoon after they get off of work, they dump another $500 in until they've placed the entire 5,000 in. They can also do it by a geometric strategy based on price. So let's say they want to go in purely based on prices going lower to ensure that they are getting in and kind of hedging their bets based on just how low the markets are in, so that they don't feel like they're buying at the top or they're about to jump in just as prices fall further if they already have been. They can do so and say every 3% that Bitcoin goes down, I'm going to place another limit order for another $500 until all 10 of my $500 orders are placed with what 3 times 10. So if the price jumps 30% down further, then they will have placed all 10 of their $500 bets. So those are two of the most primary ways that I have seen dollar cost averaging be used. And in general, I think it is a very viable strategy, really, no matter what sector you're in. If you're talking about crypto, equities, precious metals, whatever the case is, DCA is a good way to go. Now, the downside is you could be too conservative with DCA when, in fact, the right strategy may be to dump in that entire 5,000 if you really believe strongly in the asset or the sector, whatever it is. So if you want to take a more guaranteed to do well approach, you can go with DCA. If you want to be more aggressive, you can simply place your bets in right now. You can also just split it into 2 instead of into 10 and have a much better strategy that way. But in general, yeah, you want to buy in. We've all heard the strategy, buy low, sell high. But, especially if you've been in crypto a while, it's easier said than done to actually identify what a low is and what a high is with so many different variables all the time and the markets being open 24 hours a day. So if you want to truly identify what a low is, you don't want to look at the price relative to what it looked like a year ago. You actually want to look at how traders are performing. If traders are underwater, let's say they are down 20% on average over the last 3 months, yeah, that's considered a low point. Historically, prices are in the lowest 5% of where they usually rest in what is a zero-sum game compared to normal if people are down 20% in the last 3 months. Conversely, if they're up 20% in the last 3 months, that's a historic high and something you want to stray away from based on probability because of the fact that markets are more likely to correct. So MVRV, which is market value to realized value, that's basically what I'm talking about here with average trading returns and looking exactly at how other people are performing in crypto or equities in order to figure out whether you're at a low or high point. At the end of the day, we're not all in this together. You may see on social media, everyone's talking about working toward, investing in the latest altcoin to get mutual Lambos all around. That's not the way crypto works. It is a zero-sum game, just like anything else. And you are constantly competing against other people, even here on the Twitter spaces right now. So we could all believe in crypto, but depending on the timing of when you get in, you could be buying right when someone else next to you has just dropped a bunch of money. And that is how crypto tends to fluctuate.
Yeah, no, thanks for that. Go ahead, Brandon.
Yeah, I gotta disagree a little bit with dollar cost averaging. I mean, I think knowledge goes a long way, and understanding. I've never agreed with dollar cost averaging. Period. I believe that markets can be timed. You just obviously you got to have the right knowledge about it. Many people are just either they're too lazy or they don't want to do it. But if they just take a little bit of time looking at charts. I'm mainly a technical analyst anyway. I'm a chartered market technician, so I've been studying charts for over 25 years. And when it comes down to it, really, you're just reading sentiment, people's expectations, and where they're going to put their money based on what they believe. The main thing is to be able to follow what the bigger players, the whales, if you will, in the crypto space or in the traditional investments, the big money players, the institutions, and understanding where they're buying, where they're selling. I mean, I was a hedge fund trader. Now I teach trading and investing now. So I'm in the education space, and I'm a trader primarily in the futures markets. Also, I do day trading of zero DTE options as well. I run services that do picking type stuff like that anyway. But what it comes down to is just understanding that when the institutions are buying and selling, they can't dump everything they want all at once. They're going to move the market and scare the market. So they have to do what's called working the order. And the nice thing is, even in crypto, like on Bitcoin, I've been able to chart that with a lot of success. Never 100%, nobody is, but high probability of being able to identify where are these large sums of money coming in, where are they coming out, and being able to time the market with a reasonable expectation of success. It's much better than just trying to throw in money at a random time. I mean, the last speaker, I missed the name, I apologize, but he did say, if you're seeing traders suffering at a 20% drawdown at this point, there may be a good time to buy. Absolutely, that is a decent time to buy. But if you're dollar cost averaging, what's to stop somebody from dollar cost averaging from a $70,000 Bitcoin all the way down to under $20,000? And then blowing up everything that they possibly have because they can't hold on, or they end up, obviously, the frustration that usually hits right near the bottom where they blow out of everything. I just think that with a bit of education, you can actually time the markets better. And there's enough information out there for free, even on the internet, but you just obviously got to be careful with what you absorb and what you look at. Make sure you find somebody that you feel is competent, that you can follow and understand what they're showing you. And really it comes down to, again, finding what the big money's doing and following on their footsteps. Just piggyback off them.
Nice. Okay, some solid advice there. I've got two guys with hands up here, Zulian and Default. Before you come in, I want to ask you this question because the few people have talked about it now. Dollar cost averaging brought up the topic, and then it's questionable whether or not that's the right strategy. But the idea, I suppose, of entering low and selling high still implies that there's a zero-sum game, right? Which was correctly spelled out by one of our interventions. But I suppose when it comes to maxis, and I've noticed this in crypto, specifically Bitcoin maxis, they don't see, necessarily that this is an opportunity to trade into Bitcoin and then out of Bitcoin so that you can realize a profit in stablecoin. They believe the intrinsic value of the asset that they're holding is what they're kind of drawn to, and the same is true, I suppose, as well in other Web3 protocols where you are really deeply analyzing what is the economy that's being created by this protocol, and is that economy value creating? Is it sustainable? Is it solid? Is it going to be a economy that's going to overall increase in value? If it is, then you're not necessarily looking to go in low and enter or exit high. You're looking to hold those assets because you believe they're going to continue to go up in value. Obviously, at some point you need to exchange the value to be able to trade in the real world. It's not like we can we can in some places take our Bitcoin and go and buy groceries, but today, generally speaking, that's not an option for most of us. So there is that kind of still that real world application of finance. But if you're looking in terms of like growing your overall value of what you hold, then maybe we're asking the wrong questions sometimes. And that's where I'm interested to hear from you both as people who are entrenched in Web3. Is there, first of all, I want to hear what you have to say because your hands are up, but then follow on from that. Is there protocols and economies that you're extremely interested in and attracted by? And I know that you've given us a few already, Default, and Zulian, you also gave us a couple, but is there anything you've left have you left off the table? Is there anything you want to say before we get to the end of the show?
So there was one that I forgot to mention, and I haven't dug deep enough into it to have any specific examples that I can proudly put my name on and verify. But real world assets is another very bullish space inside of crypto that I think is going to do really well. But I think it should be noted that we previously said something about centralized exchanges. I can't emphasize this enough. And I say it over and over again to people, to the point that people get annoyed, but don't leave your crypto on a centralized exchange. Do not leave your crypto on a centralized exchange. I've been rugged by multiple centralized exchanges. You do not own the crypto that's on there. Literally, not whatsoever. You just have an IOU to redeem if they feel so inclined to give you back your crypto. Just go buy a hardware wallet. If you really want to be paranoid and secure, go get you a live Linux distribution and reinstall it every single time, and then you're completely safe. I see all these people in Web3 leaving their net worth in a browser extension. It is ludicrous. It's so crazy, and I hate to say it, but I don't feel that bad for them at the end of the day when they get drained, because it's you're not respecting your capital. So that's enough on that. But as far as the DCA thing, yeah, I mean, it all depends on the person, their time frame, and intraday trading is not for everyone. In the long run, most people would have outperformed their intraday trading if they just bought and held the asset itself. I see a lot of people just blowing up accounts over and over and over. If even myself, if I had just held my Bitcoin from when I bought in 2011, I would have massively outperformed my day trading, right? I've been successful, but the multitudes of my holdings of just holding Bitcoin instead of trading perpetual futures would have massively outperformed it. And I think there's a lot to be said for that, because it's not for everybody. Day trading takes a lot of technical aptitude and a lot of mental fortitude, because it's not an easy thing. It really tests your boundaries of how strong are you psychologically? And that's just not for everybody, but dollar cost averaging can work when you combine it with really stringent like technical analysis, because I don't really think you should just like dump a lump sum of money into anything just all at once and then have no reserve capital to, you know, average down if the price dips, whatever. But I really just, I think I personally don't like averaging down. I like averaging up on my winners. And the one strategy I would suggest that has been extremely successful me, and it deleverages the stress in your positions, is whenever you get 100% gain or 100% plus, cover your cost basis. And now that investment is risk free. And then you can just leave it and you don't have to worry about it. You don't have to be like, oh, I'm in drawdown, because it's risk free. So that's something that I would advise a lot of people to do. I've done it over and over and over, and it works really well.
Thanks. That's great. I mean, you covered loads of topics there, and I think they're all valuable for people who are listening who maybe don't have the benefit of all of the years' experience that you do in the space. And I did ask the question, if somebody is like attracted by the space, they're curious by the space, but they don't know how to navigate it. And of course, we've had a lot of incidents in crypto and continue to have incidents. So it's not without its risks, but I think that was really solid and sober, and very experienced also points of view coming through there from default. Thanks for that. Zulian, thanks for being patient. Go ahead.
Yeah, no, for sure. I totally agree on this side. It's just like there's a lot to navigate. I think in general, new users should focus on like learning new things, specifically on how you can manage your own assets, wallets, taking care of yourself, like not getting rugged. I think that's definitely something big. But generally, what attracted me to the space was just the whole self-custody side. So I think as users learn self-custody and then can go from there, it's definitely a huge advantage. In terms of the dollar cost averaging side, I do have some friends that have a dollar cost averaging platform where you can kind of set up a strategy. It helps to have just a better execution of your dollar cost averaging. So for example, if the price has gone up a lot recently, you'll dollar cost average less. If it's gone down a lot, then you'll dollar cost average more. So it kind of automates the dollar cost averaging so that users can actually have just better execution on the prices. So I do think it's an interesting way to get users exposure without having them think too much about price or overanalyzing. A lot of people do have work outside of crypto, which surprises me, but there's a world out there that doesn't spend 24/7 in here. So allowing for these solutions where you don't have to think about it all the time and can have a bit more of a passive exposure to it is definitely a great way to allow different users to gain exposure to the space. So yeah, I do think there's kind of a space for dollar cost averaging, even if it's not the most profitable way to gain exposure. I think, yeah, it's really just depends on people's level of risk and how much they want to be involved in different things.
Nice, Julian. Thanks a lot for that. I'm going to ask Bennett from In Public, who's my co-host as well. He's been supporting and helping with the panel. If there's any questions from the audience right now that's in the thread, or if there also is people in the audience who want to ask questions, please just use the button in the bottom right and just post your question, and we'll field it from there. We haven't got a lot of time left, but Bennett, do you have any questions that you have picked up in the chat, or just yourself that you want to ask the panel?
Let me take a look. I think currently it's looking like a lot of people are asking what kind of tokens, where in crypto are you looking to kind of, maybe have a little over leverage and invest in, such as, I guess the classic debate of, should I hold Bitcoin, Ethereum, Solana, maybe one of these newer L1s and start accumulating there? Or is dollar cost averaging the best way to go? I think there's a lot of different angles to it, but I would love to hear some thoughts on, whether or not we're going towards some of these altcoins eventually start accumulating there, or are we focusing on, Bitcoin, which many people like to say Bitcoin is king of the crypto industry. And if anyone wants to hop in there, please do. I'll toss it over to Shark.
Shark. Yeah.
I'm not gonna give them exactly what they might want to hear, but thing that I did hear is, oh, where's somewhere that we could over leverage or something. And I think that it definitely is prevalent in the options and equities market and everything, but I think it's a little bit more of a toxic problem in the crypto space. And it's really just so much. You're like someone was saying earlier, it's not about the Lambos and all that. You're not trying to get rich quickly. That never works. There's how many cases, I know it more from like when we had the COVID run, of people that made millions, and then when the market sentiment changed, they lost everything. So more than likely, and I've done it too, you make a lot of money quick, you're going to more than likely lose it quick because your trading foundation is all messed up with your risk management. You're not there for the whole pie, you're there for a piece of the pie. And again, that's just from the trading perspective. If you believe in these instruments long term, sure. But the other thing I'll say, as far as the altcoins, these things are all pumps, right? So if you can anticipate something like that, sure, use your supply and demand. But most of them have no like real function. So do your charting on the technical analysis. Sometimes news comes out based on the chart even. But the idea is not to be over leveraging ever, unless you just want to lose money in the long term, because it's just going to teach you bad habits. Because it only takes one time might work, but the next time isn't going to work, and then you're on your ass. And God knows with leverage, I don't know how it works in the crypto space, but you owe some broker or some exchange money. It's not where you want to be.
So I'm lost. Do we go into Bitcoin or do we go into altcoins? No, I'm joking. It was a joke.
I know.
Anybody else want to pick up on that thread? I mean, yeah, there's so much, and it's very difficult, I think, to navigate from this. What I think our viewers have heard is quite a few specific projects which they can look at, which are trading on the open market for different reasons. Default, I'm going to come to you, and also our other speaker, Oksanshu. I don't know if I've got that right. Just wanted to call out that it's kind of there's a lot of information being flowing today. Basically, I'm going to do my best to kind of wrap it up and give some kind of coherent summary of what I think we've taken out of today. If I'm a listener and I'm completely new to crypto, I'll have to just take a lot of notes and go and do a lot of research, because there's no way that I could just blindly go and throw money at some of these things. Although the speakers interventions have all been very qualified and very interesting. Just the nature of what we're talking about, like deep tech and then niches within niches within niches. It just takes a while to kind of get your head around. So I'm going to try and help a little bit with that in the summary. If anybody who's coming in to speak now would like to take a stab at also simplifying some of the messages from today, I think that would be really, really useful as well. But Oksan, sorry, I can't pronounce your name, but maybe you can tell me what it is when you unmute.
Hey, thanks for having me. Thanks for giving the chance. It's actually 0x Anshu. I mean, of course, the 0x
0x Anshu.
Yeah, the 0x comes from Ease, of course. But anyway, first of
Yes.
all, really great points by these fellow gentlemen in the panel, right? I'm sure a lot of them have touched upon various depths and width as well of where to look for the next opportunity. While of course I cannot give the specific names of the tokens, to ape into, I think there are largely a couple of frameworks I think through about what's going to happen, what is the view of the future, what's going to happen in the next bull run, right? The first one is of course around figuring out what is going to increase the share of or the size of the pie of DeFi the most, right? While I'm sure there will be a lot of activities happening across this bear market, the upcoming bull market, where the size of the pie will keep on increasing in terms of DeFi. But I think one idea is to look at which particular sector is going to increase or bring in the maximum increase in that share of the size of the pie, right? And for me, I think a good bet there would be to figure out who is bringing more and more forms of value on chain, right? So I think real world assets or tokenization is of course a more easier form or easier interpretation of this. But I think anybody who is working to bring a lot of forms of value could be your fiat currencies, your any form of assets. It could be your stocks, bonds, anything, right? Anybody who's bringing in more and more forms of value on chain, I think that is one of the areas which will increase the size of the pie the most. And I think those are some of the areas worth looking at. The second is, then you need to figure out who is enabling the exchange of this new value in the most seamless manner, right? And to find the answer to this, you can look at how finance in general in traditional world has progressed, right? So let's say swaps, be it AMM model, be it order book model, of course a lot of them are saturated as well. But let's say if you move beyond spot markets, you have perpetual markets, you'll have options markets as well, right? So the way traditional finance has progressed over the course of a few centuries, we can look at what is it that is still untraveled right now in a very large form, right? And possibly that is a great place to look at what's coming up in the next bull cycle. So I think projects doing exceptionally well in these two areas largely, which is a bringing more and more forms of value on chain, and b enabling the seamless exchange of that value on chain. I think these are the two areas where probably the audience can look into and see if there's something they really understand well, and then potentially invest as well.
Is there any specific projects that you think are doing these two things well that are interesting to look at? I know that you said you didn't want to name anyone. Is that because you're invested yourself, or what's the reason?
That's because I run one of them, which is the second part. Of course, I'm not in the process of bringing value on chain, but so I'm the co-founder of LogX. It's an aggregator for perp dexes, right? But of course, it's a solution. But the mission statement that we started was with by saying that how can we provide the best execution of trades on chain in a manner that it is probably as good as or even better than what we have in centralized exchanges, right? So we largely fall in the second category, which is enabling a seamless exchange of the on-chain values. So I think Logix is of course definitely something I would urge the audience to check out. But yeah, I think I would I would want to stay away from naming particular tokens as such or projects as such. I think Julian is with me here on the panel. He works with this amazing team at Hyperliquid, right? An amazing product. Again, like doing a lot of heavy lifting to just bring the CFI experience to DeFi. I think that's also a project worth checking out. Yeah.
Sounds good. No, thank you. I mean, really, really nice trends to look out for there. So, and it ties in nicely with what some of the earlier interventions have spoken about. Default, let's have it. And then I'm going to attempt to wrap this up. And anybody else who wants to speak before I do so, please also put up your hand. Otherwise, I'm really enjoying the conversation, and I want to take a stab at pulling it together, even if I'm going to mess it up horribly. But Default, go ahead.
So first and foremost, to answer, I guess, one of the questions that was being asked about being over leveraged, just my answer to that is just do not be over leveraged. You should not be over leveraged ever, because that leads to emotional distress, which leads to irrational thinking, and you're probably going to lose money, because if the price dips, you're probably going to freak out and sell because you have more money than you should have into the asset. Okay, so you need to analyze how much your income is, how much excess capital you have, and then allocate properly. And then also you need to understand what are your expectations of return, right? So yeah, Bitcoin is great, love it, but at the end of the day, your upside is limited. It just is, because of the market cap, and for you to get a 10x return, I'm not saying that won't happen, but that time frame is pretty long. Doesn't mean I don't have any Bitcoin exposure, but it's not my primary exposure, right? So you need to divide that into your asset allocation. Be like, well, I'm going to have like 30% in Bitcoin, I don't know, 20% in Ethereum, and then X amount in the rest of these other altcoins I think that are going to do well, which have a much greater multiple of returns in whatever time frame you're looking at, like 1, 2, 3, 4, 5 years. And that you should proceed accordingly with that. And I just don't think enough people do that because, like somebody asked, they want to get rich overnight. And that's just like the quickest way to losing money. Is you need to focus on sustainable growth. You need to focus on not putting more money than you should into any asset, no matter how much you believe in it, because if you are doing that, then you need that money. So you're basically going for a Hail Mary, and that's really a toxic side of crypto, which, like, I don't want to name any, you know who I'm talking about. It's like some of these exchanges offer 1000x perpetual futures. That is ridiculous. You're basically getting vaporized the second that you enter a position. All the people that I've seen that are successful in trading, they don't use really even over like 10, maybe 20x on leverage. And people just really want to get rich overnight doing 100, 150x leverage. And it's not sustainable. You'd be very surprised how quickly you can turn $500 into like $10,000 just being moderate, waiting for the right setups and just focusing on long-term growth. And I don't think that that's talked enough about in this space because it's not what people want to hear. People don't want to hear about, oh, it's going to take a while. Oh, it's going to be a process. Well, go talk to any successful trader. It's a process. And a lot of people have to pay their what we call trading tuition, which means you will probably lose money at first. And that's okay because that teaches you a valuable lesson of capital. Like, you respect your capital. You know, most people work hard for their money, and you don't just want to like throw it away into the market trying to get rich overnight because you saw some TikToks with Lambos and stuff like that. But once you reach that point of max pain, you're like, okay, wow, I've lost a lot of money. I should probably take this more seriously. That's when you start your journey to becoming profitable and focusing on taking base hits, you know, locking in your profits, and it'll grow like really fast. You'd be very surprised. And I just wanted to emphasize on that. Like, you shouldn't ever be over leveraged. And I've already said some of the things that like I'm really bullish on earlier on in the space. I don't know if anyone was here, but yeah, that's just something that I think should be reiterated.
Yeah, thanks so much, Default. Again, like, you know, super, I suppose, safe and what I would call qualified advice. And I do urge people to take, you know, full cognizance of what Default is saying, because nearly everything that you've contributed today has been, you know, exceptionally, I think, useful for people who otherwise don't have that experience. And we've had a few shows now where you've come in with some great advice. So thank you for that. Also want to say thank you to all the panel just before I try to wrap this up, because it is quite a difficult one for me to wrap up. I will do a summary as well, a written summary, which is a blog. And then I'll try to put in there some of the tips as well that were given today. There's already some of that contributed in the thread. So if you push the bottom right button, you'll get the contributions of the tips, especially from Default. He's put them in there. Thank you. If anybody else wants to add any of the tips that they thought were very, very exciting for coming up in the next bull run, then please do so. I think what we've heard today is, first of all, you know, whether or not we're in a bull market maybe is not the most like relevant question. However, you know, regardless of whether it's relevant or not, a lot of people have said that they think the bull market has started, and I suppose that becomes important if you are looking for, you know, a long-term trend and you're looking for an entry point into the crypto market, right? We're here to talk about crypto. We're here to talk about Web3. But you know what Default said and what other people said, I think, is very, very important. You know, don't try to, like, you know, look for the leverage trade that's going to get you Lambo, you know, kind of overnight. Really look for something long term, and look for, you know, something that is following a trend and has some strong fundamentals behind it. I know that we've had the meme coin season in crypto, and that just makes a mockery of nearly everything we've talked about, not just today, but almost ever in Web3. So like, there's always that parenthesis that there is, money to be made in that kind of pump and dump zero sum game. If you want to be involved in that, that's fine. There is strategies for that. Today's not a show to focus on that. Today is a show to focus on, I suppose, what are more considered approaches towards trying to do well in Web3. And what I've heard today very much was really interesting. So thank you for the macro and also the traditional economists and guys from the equities markets who have told us that there's definitely increased interest in deep tech, and liquidity is starting to flow and will flow more into those areas. Whenever we become a little bit more risk on, then it will flow into back into crypto, and within crypto we are actually deep tech. So we fit the narrative, we fit the mold, but within crypto then it becomes challenging for us to understand what we should be looking at, right? There is a lot of noise in crypto, and when you're in that bubble with the thousands and thousands of people competing for your attention, it does become difficult to navigate that and to stay calm and objective and without too much emotion and find your way through the noise, right? But what I've heard today is real world assets is very, very interesting. Anything to do with deep tech, I guess, again, distributed GPUs, decentralized quantum computing solutions. These are areas which I know very little about, but I'm interested to follow people who do understand it. And I do believe there's huge coherence between what's happening in investment outside of crypto and also what's happening in investment inside crypto. And there was definitely a red thread there whenever we talked about GPUs and solutions which are able to offer efficient solutions at scale. So I would be following a few of these trend areas myself personally. I'd be looking at that. Not financial advice, but these are established kind of trends coming from experts. So I think something very interesting to look at. There was a bunch of actual assets that were discussed today. I'm not going to go through them all now, but they do kind of fall in within those niches that I mentioned there. A lot of them are DeFi related. We still are very much looking at DeFi here whenever we're looking at what's going to do well in the next cycle. However, DeFi combined with real world solutions and bringing value on chain. I do like what people are talking about there. Anything that's bringing value on chain from traditional sectors, I think that those are all things that are very, very interesting. And then the infrastructure around those, so how to exchange that value, and that was a really good intervention that was spoken about. So there's a lot of different niches here that we could look at. I'm super thankful for the interventions that have come forward today, and I suppose what we're saying is there. Even with the market conditions, even with the general kind of insecurity, uncertainty, the group here today is relatively bullish and is looking for opportunities that they believe are going to do well in the next cycle. There's been a few that have been named, so not financial advice, but do with that what you will. I do believe there is a sector for us to continue to live in and operate within for the next, it's here to stay, hopefully. So I'm rambling on. I want to call an end to this Twitter Spaces now. But thank you very much for everyone who's contributed. This is the All Street Beat. It has been brought to you by Commonwealth. And I look forward to having everyone back here again for the next All Street Beat next week. So thanks everyone, and take a nice a nice cup of tea or coffee or whatever it is. And thanks everyone.
Thanks so much for having us, guys.
Thank you so much for having us.
Thanks everyone.
Bye. Take care.
Thanks everyone.